Okay, welcome everyone. There we are. What's up? It's great to have you here. Come. Putting you guys on the screen. Okay, welcome everyone. Good to have you here. Another day, another live stream. Later than usual because we had friends over during the weekend. I actually didn't communicate that on socials, but friends from the Netherlands came over. Best friend, his girlfriend, and their little kid were here Friday evening till later today. And it now gives me the opportunity to go live and chat Elliott waves, right? So we're going to analyze the chart, analyze what happened, and there is basically one very important level on the chart that you should know about. So that is what we're going to cover. We will cover the 1 hour time frame most of the time, and I will shortly zoom out to the 4 hour time frame later in the analysis as well. But we're going to start on the 1 hour time frame. Have you gone back to Windows yet? No. Something is wrong with the sound. Uh-oh. Is this better? Wait. Oh shit. It might actually... I think it might actually be my MacBook. I have no idea which microphone I'm using now. Sounds fine. 1 second. Let me listen to myself here. I'm gonna mute. I'm gonna listen to myself here. 1 second. Oh no, that's not good. That is not good. This is not correct. Damn it. Okay, check your system settings, sound input. Yeah. Okay. Oh man. Input. It currently is on Streamer X main. Okay, so this one works. It's fixed, I guess. You sound fine. Oh, is it better now? Did we fix it? Okay, I plugged out the cable and I plugged it back in. Let me quickly listen to myself, double check. Okay, we're back. Yeah. We're back on. Okay, good. Woo. Okay. We are back. We got the audio sorted. Thank you. I plugged out my laptop for the first time with the MacBook from my dock here. And I then plug everything back in. So not sure what went wrong. Hopefully it doesn't happen too often. Okay, there we are. Welcome everyone. So yeah, in what I was saying, this time in a good audio quality. I still have to tune the audio. It's not perfect, but it's better than it used to be. So that's good. But we're going to mainly be covering the 1 hour time frame today. And I will zoom out shortly to the 4 hour time frame, because that is important for one of the scenarios that I will talk about today. After that, we will jump into chatting and Q&A, planning to be online for about an hour as usual, and then we'll take it from there. No, yeah, welcome everyone. Good to have you here, Adam, Alexandra, Jeroen. Welcome. We got to give you, I guess, access again if you are not hacked anymore. Wait, how are you still? Oh, wait, I removed you. Yeah, let me know how you're doing, because you're still a mod here, but this is you. Yeah, so we got to get you access again. If you fixed your stuff and made sure that everything is 2FA, like everything has to be 2FA. Gloomore, TP, Christian, GTP Sleeper, Tarun, welcome guys. Welcome. Rahul, first almost. Hash Kevin, how you doing? Yeah, we fixed it. Bitcoin Slayer, Gluka, what's up? Barbie. Yeah, I mean, sound is important, of course. You know, I also want to upgrade the quality, right? So, Daniel, Bigsby, welcome. But we fixed the sound now, so that's good. Mohammed, what's up? Welcome. Ice Cubes Lady, Brian, Milo's, Mool, Hash. What's up, Daniel? Trunks, Rage Trunks, always nice. Pineapple, sorry. Okay, Legendario, Odin, by the way, Adam, Jeroen, good to have you here. Thanks, guys, for joining. Arcadius, welcome. Let's start. Eric Dorian, Lafla Mort, welcome, guys. So let's start. Kanashimi, good to have you here. We're going to go to the 1 hour time frame, and I will cover, as always, bullish and bearish scenarios, and then we talk about probabilities. And actually, the probabilities are very easy because they are related to the 0.618 that is above us at 102.5K. If you hit that without making another low, you're going to be looking for probabilities for price to move up, right? We didn't touch it yet. We actually just missed out. The reason why this level is so important will be explained in the analysis that we are going to start right now. So let's start with the two bullish scenarios and then the bearish scenarios in random order, right? So, and you will see that in every scenario, I have this 0.618 on my chart. So the first scenario here on my chart, that's your bullish scenario. So in this particular case, you are looking for price to take out the all-time high. And here we then have a high labeled as an A1 or W. Now you might think, how does that work? Because a wave A and a wave 1 are a 5-wave structure, and a wave W is a 3-wave structure. Now, interestingly, it actually doesn't matter. Because of this drop to the downside, we are here always looking for a 3-wave structure to the downside now, right? Starting preferably from this high. So therefore, you just label this as either a W, A, or 1. Doesn't really matter, as in all cases, you're looking for price to take the high. With regards to a W, we talk about a double zigzag, right? So you have an A, B, C in W, 3-wave in X, and then an A, B, C up in a wave Y. That's your bearish WXY. The only level that is important for W is the 0.7. The moment you hit the 0.7 at 95.1K, the probabilities significantly go down for a WXY, and it will be removed from my chart, right? But anyway, in this scenario, what you're looking at is a first move up in A1 or W. Again, it doesn't matter, right? You're starting the correction from the high. You look for a 3-wave structure to the downside and then continuation to the upside in a wave C3 or a wave Y. An alternative way to count this is, by the way, this over here, right? Where you finish your B just one high earlier. Instead of here, it then finishes there. Honestly, right, you're just looking for an impulse to the downside. All of this actually doesn't even matter. You can do this, and there you go. We can remove that whole other scenario. So in this particular case, you then have your A, you have your B, corrective structure. You look for C towards the downside, which is a 5-wave impulsive move to the downside, either finished at the low or not finished at the low. Probabilities at the moment higher for it to not be finished because of the 618 we touched here, but more about that in a little bit. Your common target for a wave B2 is the 05 to the 786. So that is where we are at the moment, right? We need to see some signs of strength, proof of support. Of course, we do have support in this area. We have the naked point of control, point of control of the range at 98.5, a little bit of a bounce. Just below, we have some more support, which is the blue boxes, or are the blue boxes, 96.2, 96.9, 94.1, 94.6. And then we get very low, of course, 91, 92, and below that, we go back into the 80s pretty much. Right? So this is your, again, bullish scenario. You look for at least a 3-wave structure, if not continuation to the upside impulsively, but that only becomes relevant if we take out the all-time high and we get some local signs of strength, which at the moment we do not yet have. So we need to be very patient. Now, with regards to your wave C over here, right, A, B, C, C has to be a 5-wave structure to the downside, depending on where you end your B, either here or here, depending on the subwave structure. You can be looking for a 1, 2, 3, 4, and then a wave 5. One more low in the wave C, finish your wave C, then see signs of strength, right? Impulsive moves and upside. The 3 different wave structures that you want to see for the bulls, right? If you make a low, is either an impulse, 1, 2, 3, 4, 5, retracement, and you look for continuation. Second is a multi 1, 2, 1, 2, 1, 2, 1, 2, boom, up in 3, or a diagonal, right? 1, 2, 3, 4, 5, correction, continuation. And preferably, you touch the 0.618, which we didn't. We just missed out. The reason why this is so important is you invalidate a wave 4, which is relevant for the bearish scenario, which I explain in a second. Now, if we want another low in C, 1, 2, 3, 4, finished here at the high preferably, and then another low in 5 is what we're looking for. If we touch the 618 before making another low, then we are not counting this anymore as a wave 4. And more about that later. Anyway, bullish scenario is very clear. From a probability perspective, a bullish scenario only becomes interesting if we touch the 618. As long as we do not touch 102.513, this whole scenario is not relevant, basically. It's not interesting. You gotta wait. I prefer patience, right? Patience for the probabilities to be in my favor. And they are in my favor once the 618 is touched. And once, from my trading at least, once the 618 is touched, that is when I look for an opportunity to the upside from an Elliott wave point of view, right? Okay. Now, if we then zoom in to this structure here, so we go to the 50 minutes shortly, then you can actually do the same as I just did on the 1 hour. You can do the same here. So we have I added a 618, right? This one. This 618 is taken from this low to the high. So the question becomes, as mentioned, if we make a low, can we count an impulsive structure? Can we count an impulse, a diagonal, or a multi 1, 2? If we cannot, the probabilities are higher to take out the low. Now we have a move towards the upside, did not touch the 0.618. It's close, but we didn't touch it, right? So we need facts. We didn't touch it. So wave 4, in other words, not invalidated. Can we count this move to the upside as an impulse? Well, it's difficult because if it is an impulse, we want to see 1, 2, 1, 2, 3, 4, 5, 4, 5. Where is my 4 and 5 here? I didn't get my extra 4-5 that I was looking for. Another reason that I was looking for, if bullish, another 4-5 is because the highest volume in this move up is in the high. And that is typically for a wave 3, right? Typical for a wave 3 or a wave C. Now, if we know that probability-wise, having the highest volume in an impulse is in a wave 3, you would look for another 4-5. Now, if you look for another 4-5, the invalidation for a wave 4 is the 0.618 taken from this low to the high, which is the one that you see on my chart. And the wave 4 has been invalidated because we touched the 0.618. So therefore, I cannot count this anymore as or potential as a 1, 2, 1, 2, 3, 4, 5, 4, 5. Just to put it on the chart to make it, like, I suppose, visible. Right? So this is impulse, right? Doesn't work. Wave 4 in green, too deep. Touch the 618, invalidated, right? So we can't count it like this anymore. So that is why you're changing the moment you hit the 618 to either a multi 1-2, which basically means 1-2, 1-2 continuation up. The moment price touches the 886 at 98.680, the probabilities for this will also significantly go down. Important level. By all means, by the way, the moment you touch the 618, probabilities are always going to be higher for this to be an ABC and for price to take out the low, right? Unless this becomes a 1-2, 1-2 up, or you're going to have a diagonal, and this is wave 1, 2, 3, 4, 5 correction continuation. It's too early to talk about diagonals. It's completely irrelevant to talk about diagonals at the moment, right? Multi 1-2 is still, of course, a possibility, but the moment you touch the 886, that the probabilities for that scenario will significantly go down. And besides, the probabilities for a double 1-2, right? 1-2, 1-2 versus counting this ABC are always lower unless you take out the high. So probabilities are higher. This is ABC, and for price to take out the low compared to a 1-2, 1-2. Another reason, if we want to be more technical, the reason probabilities are a bit lower for a multi 1-2 here is because your second wave 1 is significantly longer than your first wave 1, right? In price, as you can clearly see, right? This second leg up is a lot bigger than this first move to the upside. And generally, if we talk about a multi 1-2, what we like to see is a wave 1, 2, and then a smaller 1-2, bit smaller again, and then we push. And that is the Elliott wave degrees for you, basically, right? 3, 4, 5. That's your highest degree. Then you have a lower degree 1-2, which preferably are smaller in time and price. It's not a requirement, right? It's not a requirement. It's just most common. Right? It's just probabilities. So every 1-2 is preferably a little bit smaller in time or price, and sometimes they might be a little bit bigger or around similar size, but you can see that this move up is significantly longer than the first move to the upside. And it has the highest volume in the high, right? Of course, we can count it as another wave 1 as well, but preferably this was a 3, 4, and then move up in a wave 5, touch the 618, retrace, longer retrace, continue up. We invalidated wave 4. So that's why local probabilities here are higher for an ABC. And for price to take out the low, your bullish alternative becomes a multi 1-2 the moment you touch the 886, taken from the low to the high. Probabilities will tank. It's already an alternative, but it's important to know the levels. Touch the 886 at 98,680. And then your alternative, right, on the third spot for the bulls would be a diagonal, which is at the moment completely irrelevant. Okay, now then we jump to the bearish scenario. And actually for the bearish scenario, I will start on the 4-hour. So that's for the bulls. So the bulls, right, the bulls, you need to touch 102,513 before making another low. It's a minimum requirement. And the moment you do touch the 618, probabilities are in favor of counting ABC. with the bearish alternative, there's always a bearish alternative, being a 1, 2, 1, 2 and get a 3 down. Lower probabilities the moment you touch the 618, but that's going to be your new bearish scenario the moment you touch it. Now, the existing bearish scenario here is a regular flat. Because of course, if we count this in ABC to the downside, we can also potentially count it as a 1, 2, 3. Right? It's basically impulse, correction, impulse. Right? Now, in this case, your wave A is a double zigzag. Then your wave B is also counted in detail. Let me show this. As then a double zigzag, small variation from previous counts. And then you have 1, 2, and you look for an impulse to the downside. This is where the 618 again becomes very important, which is now taken from this high again to this low. Right? The moment you touch the 618, we cannot count this as a 1, 2, 3, 4, 5 anymore. So then we again have to move into 1, 2, 1, 2. It becomes messy, but yeah. So 618 touched, 4 invalidated. As long as you don't touch the 618, this scenario is very much alive. And what you're looking for here is, in that case, for a move down in a 5, another 4. So we have our 5, we have our 3, we get another 4, and then we get another leg down in 5. And then you finish your C of a regular flat. Find support, and then you continue to the upside to take out the high. Now you can imagine that if price does move down and you take out this low, this is then becoming your bullish scenario. At the moment it's bearish, but the moment you would take out the low of A, this is your bullish scenario and you look for all-time high. Bearish scenario, 1, 2, 3, much lower prices. Or A, B, C, also much lower prices. At the moment, not yet relevant, but it's good to be, I guess prepared. It's just how scenarios change when things happen on the chart, right? So the 618, important, 102.5. Now, what is interesting though, in this particular scenario, if we go to the 1 hour, is that the recent move to the downside here, right, is on lower volume than the peak volume we had in this move down. So this is your wave 1, whatever the internal count is. Then you have your 2, and then you have your impulse down in a wave 3. But you can clearly see that this peak in volume is a lot higher than the volume that we have here. Now in an impulse, preferably your wave 3 of 3, so your wave 3 has the highest amount of volume, which at the moment is not the case. Now, of course, this was, we had the Trump pump and I don't know what, like it was an incredibly news heavy week, right? So volume might not always be representative. But what we would like to see, if this is a wave 3 of a wave 3, then what would be nice is to have it, of course, extend further, right? First of all, we don't want to see the 618 touched. And second, we want price to significantly move to the downside and, of course, volume to remain high or increasing. Because at the moment, this move is not very extended. It's not very long, right? We can take a trend-based fib from the start to the end of 1 to the end of 2, and you'll see that it's the same length, right? This move down is the same length in price as this move down, right? Almost identical, respecting the 1-to-1. Now, mind you, this 1-to-1 here is a common target for a wave C in an A, B, C. The 1-to-1 is also a common target in a W, X, and then a Y, right? So at the moment, you are at a target for a wave C or a wave Y that has not yet been broken, right? But we didn't yet touch the 618. Patience, a bit of patience. Need a bit more trust, let's say. I'm not gambling. I just want price or probabilities to really move in my favor. Now, when we would look at the chart, okay, peak volume is lower, the extension is not incredibly long. Those are two things that do favor an A, B, C to the downside, and then later for price to move towards the upside, but I need a bit of proof of strength. And from an Elliott wave point of view, I get a bit of trust in price moving up and looking for all-time highs if we actually hit this 618, which of course we haven't. So I am not interested in being too early trying to snipe. This is my personal plan, but I am not in a long. I'm not favoring trying to snipe the lows and being the first and all that stuff. I want probabilities to be in favor. And even though I'm interested in an ABC down, right, I need price to hit that 618. And only then am I going to start looking for longs. But that's, of course, my way of trading. Everyone has a different way of trading. And that is when this scenario becomes interesting. Touch the 618, and then it becomes interesting to look at this. Also, if we touch the 618 here, by the way, the probabilities increase for the low that we made here to be the low of a B2 or an X, because then this corrective structure in time is similar to the move up, which is nice, right? Your alternative bullish scenario becomes a W, X, Y double zigzag and then move up. But that means it's going to take a lot longer in time. So if you hit the 618, probabilities increase for price to take the high and increase for this low to hold. And then we just want impulsive structures to the upside for price to take the high. So those are, so you can see that it's a lot of chatting, but it's all about that, all about that 618. And at the moment on the 15 minutes, right, it's difficult to be bullish, as explained here. So bullish scenario, summary, and then probabilities. Summary, bullish scenario, 1AW, doesn't matter, right? You're starting or you're ending here, you start a corrective structure, and then you look for price to move up. If W, X, Y, the 0.7 should not be touched. That's an important level. Common target for pretty much any retracement 05786 taken from the low to the high. That is where we are at the moment. If price touches the 618, the probabilities increase for this scenario and for price to take out the high. And you got to hit this before taking out the low. Okay. Bearish scenario, regular flat, 3-wave A, 3-wave B, 5-wave C to the downside. In detail, on the 1 hour, this. Now that means you don't want to touch the 618 as that invalidates wave 4. You want price to now take out the low before touching the 618. And mind you that the moment we take out this low, in the bearish scenario, you're going to have a 5 and look for another 4, 5. Meaning that this 618 will then be taken from the high of 2 to wherever the low of blue 3 is. And then this becomes your invalidation for your blue wave 4. In other words, if you take the low and you go up and hit the 618, A, B, C, still the same. 1, 2, 3, 4, 5 in C, and then you look for upside. But that again is only relevant after we actually take the low. I might be ahead of myself and I might give too much info, but at the moment, this is what we're looking for. Touch the 618 or take out the low. Touch the 618, probabilities are higher for price to take out the high. Take out the low, and the bearish scenario remains standing as an option. So, yeah. We did not touch the 618. So, okay. And that is that. I don't have my polylines here, so that's all polylines. So, yeah, that's a probability. So we just basically wait for the 0.618. And I do not pull my 618 from, I don't know, I see something in chat, but I pull it from here. I don't pull it from here or here. I pull it from here. All right. Also, I only use Coinbase. I do not care about the charts on Bybit, Mexi, BingX. Even though I trade Blowfin, I don't use Blowfin. Based on my statistics and my data, Coinbase is the best and most respected chart with regards to the fibs, the candles, the wicks, and that's the one I use. So I've been using the 618, of course, on my chart. Everyone is free to use it on their chart, but I will only ever respect the fibs being taken on my chart. And of course, they have provided very, very fruitful in the almost 2 years that the YouTube channel is alive. And of course, my trading already started before YouTube. So yeah. But everyone can, of course, use their chart of choice. Many are calling for a bear market. That's the moment to be bullish, no? Let's see. Okay, wait. Chatting in Q&A, by the way. Elliott wave analysis. I actually forgot when we started with the analysis. I guess we started somewhere around... Let's see. Let me put this. I might actually be able to track it down. Okay, so we started the analysis about 22 minutes ago. That means 15 minutes into the live stream. Let's do 16, just in case. Now chatting in Q&A. There we go. Pin the message. Okay. Most of the time, the market goes for the least expected one. Yeah, when everyone looks into one direction, I hate looking in the same direction. For that reason, I would agree. When is your Elliott Wave book going to be available? Yeah, so the Elliott Wave Compendium is planned for like middle of this year. There's a lot that needs to happen, but we do our best. Yeah. So the Elliott Wave Compendium is there's so much information in there. It's including time, volume, all the structures, what's common, what's rare with regards to targets and retracements, and volume, tips about the 886, right? 618, a probability table, information about Fibonacci, how to pull fibs. There's so much stuff in there, a lot more than in any other resource that I have ever encountered in my career. I'm happy to add my 2 cents to the Elliott Wave world. And yeah, we're working hard, but yeah, it takes time. Also because I first need to set up a business now in France, of course, because I moved. So that has priority. And once that's done, I can really put focus on the compendium. And a compendium is a book, but it's basically a very strong summary of a certain expertise with lots of graphs and tables and information. So that's what we're doing. And then this Trump candles happened and I was like, nope, I'm out. Yeah. No Legendario. It will be completely separated from anything. Yeah. Oh, wait, an early opportunity? Yes, but I mean, possibly. But I can't do previews and those type of things. I sometimes give a teaser on live stream. Of course, maybe there can be an early opportunity, but usually this type of content, like a book, is not really an earlier product, let's say. So yeah, at the moment, it's just a completely separated thing. We could have hit the 618 on other exchanges, possibly, but it doesn't. On my chart, it's not touched, and I only look at my chart. I don't value any other chart. I've always used, or actually in the beginning, I used Bybit, back in the day, long time ago. But then eventually I decided to track statistics and data on different charts. So I took the biggest charts,
and I had Binance, I had Bybit, I had Coinbase, I had a few others, and I tracked the statistics of the candles and the fibs, and if the highs were taken on the one exchange and not on the other exchange, and I kept an eye on the volume. And based on that data, Coinbase was the best chart, and I've never used anything else than Coinbase since then. So yeah, maybe on other charts it's touched, maybe not, but I don't look at other charts. It won't change my probabilities. So if price touches the 618 on Coinbase on my chart at 102,513, only then do my probabilities switch to bulls, to the bullish, to the bulls basically. Yeah. We just missed out. We got close, so of course I was interested when price moved up here. We got close, but we didn't touch it, and that's what's important to me. Is I need to see it touched. And we didn't. So of course, the moment you would move up now, touch the 618, probability is higher. This is an ABC. Now, of course, an ABC can still move into a WXY double zigzag. So in other words, the moment we touch the 618, your bullish scenario is ABC up. Bearish scenario is 1, 2, 1, 2, continuation down, not highest probabilities. Your bullish probabilities have higher probabilities then if you touch the 618. And a bullish alternative becomes a WXABCY and then move up, which is labeled as WXY and then go up after. So that is basically, you know, my content now. After the 618 is going to touch, you know what I'm going to talk about. So yeah, it's about 102,513. Touch that ABC, highest probabilities, lower probabilities for 1, 2, 1, 2, continuation down. Alternative bullish scenario becomes WXY and then up. Yeah. So yeah, that is of course it's good to know how probabilities change and how scenarios change when things like when certain levels get touched or potential invalidations get hit. So and of course the 618 here is on my chart for a reason as well. Wave 4. This now becomes a 3-waver as well. So either 1, 2, 1, 2 up or a diagonal for the bulls. For the bears, this is an ABC, and you look for price to take out the low. Potential 1, 2, 3, 4, 5. Find support on the previous range. Look for a bit of a bounce, and then take out the low. Right, continue an impulse down. That's a bearish, of course, a bearish scenario. I don't often go to the lowest time frames, but hey, if we have a little look here. This is the steepest move on the highest amount of volume. So preferably this is part of your wave 3. Right, so this is a bit of a grind. So potentially there's a diagonal in there, right? 1, 2, 1, another 2, of course. Then you get your 3, 4, 5, 4, 5. Your first move to the downside, it might be finished, but this would then, of course, be counted as an impulse to the downside. Now, an impulse down is either a wave 1, wave C, or a wave A. Now, if it is a wave C, because an A and 1 are bearish, because A or 1 leads to at least this, while a wave C would lead to this. Now, if this to the downside is a wave C, then it needs to be part of a flat, meaning A, B, C. Which basically means that this high needs to be the end if we want to be bullish, right? And count this as an ABC for a flat. Then this high needs to be the end of a wave 5 or an impulse. 1, 2, 3, 4, 5. Where's my 4, 5? I don't have a 4, 5. So this then still counts as a 3-waver ABC. Now you're not allowed to have a flat in wave 2 of a diagonal. So then a diagonal goes out, which basically means that the scenario remaining becomes a 1, 2, 1, 2 up. The moment you touch the 886, as mentioned here, but this one is lower. So now 98,589, so 98.6. The moment you touch it, double 1, 2, also low probabilities. At the moment, though, quite simply, because you touched the 618, probabilities are higher. This is a 3-wave ABC. Meaning probabilities higher to take out this low unless we move up and touch 102,513. That is the moment we then count this as either 1212 up, or we look for a diagonal for the bulls. If you touch the 618 and you move up correctively and then go down, 1212, 3 down, bearish, not really preferred. At that moment, it's better to have a WXY if you do go down, double zigzag. But yeah, that's like, we're really talking about like what's happening far in the future. We're not there yet. It's not really too relevant. But I guess in a way, for people that do like to learn Elliott waves, like knowing how scenarios change and probabilities change if certain levels are touched is very relevant for your trading, right? Yeah. Technical indicators, just trying to group those indication onto a sense. 3M, 6M futures markets. Yeah, possibly, and maybe some other charts it hit as well. But yeah, everyone will have their own chart, their own preferred indicators or levels. Yeah, I found my favorite chart, of course, a long time ago. So I like my levels to be hit. Yeah. What do you think about an expanded flat? Would be a regular flat in this case, Taha, on the 4 hour, I guess you mean. So on the 4 hour, we do this. So then you talk about this. So this would be a regular flat, right? Not an expanded flat, a regular flat. So your wave B ended in the target area for a regular flat, which is between the 09 and the 105. And then the target for your wave C is between the 1 and the 1.236 most commonly. Right? 90 to 85.4. Nicely in confluence with the target box here. Not bad. Yeah, it's definitely a scenario. As long as you do not touch the 618s, you're going to be looking for higher probabilities downside. We still have some support down here as well. So 102,513 at the moment is basically the most important level on the chart. And if you take out this low, then this 618 is going to be taken from this high to wherever the new low is going to be. Or actually, this is a higher high, a little bit. So you could take it from here to wherever the next low is going to be. And then you toggle on the 618 again. And then that is your new invalidation. So it's basically, we're just checking 618s now. 618 simulator. Oh. How would it look Elliott wave-wise for a bounce on 94.3? Okay, somewhere here. Poke of the range and 1-to-1 extension. I'm not sure which 1-to-1 extension it is because we are currently at the 1-to-1 extension. So if you take a trend-based fib extension from the high to the lowest point here, right? First move down to the high, and you can see we touched the 1-to-1. So I don't actually know 94.3K. How did you get the 1-to-1 extension there? Did you do something like this? No, I wouldn't really know. But from an Elliott wave point of view, if we would bounce on 94.3, first of all, are there any targets? Yes, we have 94.1, 94.6. We have a couple of confluences here. So daily, range point of control, and a weekly. And with regards to an Elliott wave count, right? For the bulls, you would then look 1, 2, 3, 4, and then a wave 5. Hit support, and then impulsive structures to the upside, right? For the bears, that is going to be, again, 4, 5, corrective structure up, and another 5. Right? Lower prices. That's then going to be your two scenarios. And the 618 is once again going to play a very important role in that case. So there is absolutely a scenario vision. Right? There's absolutely a scenario that can bounce on 94.3. Divine Hood. Just want to let you know the sound today does have a bit of a reverb. Yeah. Let me check. Let me check my sound again shortly. 1 second. I'll mute myself. Yeah, I still have a little bit of tweaking to do with my sound. It's definitely not perfect. So the first live stream I did with the new mic and a new setup, well, my sound was very, very flat, I suppose. A bit high pitched, very, very flat sound. I don't know how to. I'm not a musician or sound technician, so don't really know how to explain it. But some people will understand. So with some OBS settings, I managed to get a bit more bass, a bit deeper, but it's not yet the end result. So thanks for your feedback. And it is definitely something we're working on. I completely agree. It's better than it was at the beginning for myself when I listen to what it is now compared to the beginning. But there's still tweaking to be done, and it will take a little bit of time because I don't know too much about the sound. So I just touch the buttons and I listen and check and use some YouTube videos to learn more. What are your good rules to follow when looking for a top signal? Looking for a top signal. Good rules to follow to look for a top signal. That's a fun question. Well, first of all, you want different time frames to align. Right? So let me explain what I mean. Oh, sorry, I touched the mic here. Let me show you what I mean. Is it this one? No, wait. This one. Yeah. So let me get this one here. Okay. Is it this one? Yeah, I think so. Okay. So look, it's first of all, it's all about risk to reward, right? It's all about risk to reward. Longing over here for swing trades is of course most interesting. Not always too obvious. This was also a great long area for swings, right? This was clearly corrective. But now you can see that, well, we do have a 5-wave structure on the weekly, which is the bearish scenario now on a weekly time frame, right? That's what you see here. 1, 2, 3, 4, 5. So at least it's got to make you aware of the potential of topping anytime soon. We might not, and based on the lower time frames, we will be able to identify, right, is this your higher probability weekly scenario? Or is this your higher probability weekly scenario, right? We'll know because this move to the downside here should be corrective. You're looking for another 4, should be a ranging structure. While if you end a bull market, this move down is preferably, this is preferably impulsive, right? This should be an impulsive move to the downside, this one here, to lead to lower prices. If this is corrective, it's difficult to be very bearish, and then you preferably look for higher again, right? So first of all, it's good to be aware on a weekly time frame. If you're looking for a wave 5, yes or no? When price was ranging here, we're not looking for wave 5s yet, right? Also in the bullish scenario, on the weekly, right? Not the polylines here, right? This is counted as another 2. So this here was either 4 or it's 2. 2 is, of course, most bullish. 4 is most bearish. But in both cases, you're still looking for price to move up. But now that we got to move up, you're looking for a 5, right? Bearish scenario, you finish 5 and you go down. Bullish scenario, you get another range and you go up. Now this range should take a significant amount of time, and it should be relatively easy to identify this as a 4, should be corrective, and to find another entry to then swing trade for the 5. It shouldn't be very difficult. So this is only the weekly. Do we identify a top? Do we know that a top here is coming? No, but we have to be aware of the fact that we can have a wave 5 here, which is important for risk management. And I personally am very happy to manage my positions accordingly. And if we then get a retracement again, I observe. And if this is corrective, I enter again and I look for the next leg up. Now then, of course, on a weekly, we're looking for a wave 5, meaning this has to be an impulse. Okay, well, if that has to be an impulse, we got to go to the daily. And that means, let me remove the mess a little bit here, right? Make it a bit more clear, remove all the other stuff. So that means that on a daily time frame, we need a 5-wave move, right? So this wave 5 can be the potential end of the weekly yellow wave 5. 1, 2, 3, 4. Potential 5. We took the high, right? Preferably not, by the way. Preferably this. Everything, if you do go down here, it's ABC, and then this 4 moves here, and you still look for another 5. Why? Having a wave 5 that only wicks 3, it's not common. It's not very common for that to happen. So preferably you still move to higher prices, right? Even if you have a flat ABC, and then we look for up. But then again, knowing that this is the high of a 3, you're looking for a 4 and another move up in 5. What do you do from a risk management point of view, right? Can you count another 1, 2 here to then add another 4, 5 later? Yes, but is this a very good 1, 2? No. So I prefer to be safe and then be like, well, looking for 5. The moment we take the high of 3, I better risk manage my positions. I got to take care. If the move to the downside here is corrective, I'll add another 4 and another 5. Right? I look for another entry, I trade the 5. The moment that inside this wave 5, I can count a 5-wave structure, I will manage my trades accordingly again and wait for another retracement. So at the beginning, so let me explain how to do this from a trading perspective. I guess that's very valuable. So in the beginning, when a move starts, trading wise, it's incredibly different. Right? It's very different to trade the potential end of a market than the beginning. Right? So here we get a move up. Here the question is this the beginning of a new trend? Yes or no? Because your alternative was ABC flat. But the moment we took out this high here with this high, probabilities were higher to continue. And therefore the probabilities were higher to look for at least an ABC 3 wave or an impulse. Right? So really from a bull market perspective, this drop here, that's where things got most interesting as the probabilities were really higher to look up. But anyway, if you go to my YouTube channel, I actually posted a short, I don't know, like somewhere here in the beginning, where I was talking about 100K and for all-time highs. You'll find it. It's one of the oldest shorts on the channel. So probabilities. But here we had impulse up, correction on the low time frames, very bullish CVDs, lots of absorption. And just from even counter trading wise, trend is down. That was an interesting long. Now then you get a very impulsive move up. Now this move up, okay, clearly you're looking for a 5 wave now. 1, 2, 3, 4, 5, right? Minimum. So you just wait, right? You take the hit. You wait for a 5 wave. Okay, I might sell here, right? I might sell here. Entry, exit, perfect, right? Probabilities on the weekly might not yet be higher to look for all-time highs. Now then we get a 3-wave structure down, double zigzag, by the way. Right? That double zigzag confirmed, look for another entry, right? Internally another 5-wave structure. Once 5 waves are finished, exit. right? Now we have the potential ABC as well, or a 5-wave structure. 1, 2, 3, 4, 5. So I got to be aware that ABC and then down again is an option. So I want to be safe. But the moment price took out this high, any long, that's when longs were a lot more interesting. So multi 1, 2, right? We couldn't count this correctively anymore. Look for a long, but now these are all swings. This is where the swinging happens. These are arguably also swings. You have them for weeks. But this is where you are looking for significant moves. This is not where you take your profit at the next range type of trade, right? So this is entry. And basically with every corrective range down, you're going to try to look for a new entry and entry without really taking profits. You're just looking to extend the wave, follow the count. Because now you know you're looking for higher. Probabilities are higher for upside. Right? So every new range becomes a new compound opportunity. And then on the weekly, eventually, price shows itself, right? We don't know this yet. This is a wave 3 the moment you go up here. Bearish becomes ABC. Bullish is 1, 2, 3, right? But at least you're waiting for a 5-wave structure and you observe the next range because it has great swing potential, right? So you hold. The moment we are here and we get this size range, right? Yeah, you got to take the initial hit of a 20% retracement. But the moment this range forms, that is when on a weekly you'll be like, okay, 1, 2, 3, 4. Now I got to watch out. So the next move up can be the potential of a finished wave 5 on a weekly time frame. So this is about adding to position, looking for compounds, right? Not profits. The moment you take out this high, everything after is basically taking profits. And if, here it is entry. Every next range identified is compounding, right? This is not my take profit area. This is compound area. The moment on a weekly, this has the potential for a 1, 2, 3, 4, looking for 5. So we can now label this as a 4. That is the moment where my trading changes from compound and hold to take profit, wait for a range. If the range is corrective, I re-enter or I re-compound, right, accordingly. But now I am a lot more interested, right, in taking profits, wait for a range. If the range is corrective, I will re-enter and look for another leg up and profit. Get a range, re-enter, profit, re-enter, profit. And I do that as long as I have to. Here, it's just enter, 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 and I observe because I expect higher, right? Because probabilities change to bulls. Whole bear market, the moment here we took out this high, probabilities changed. So now I'm interested to look for upside, right? With the potential of all-time highs. So it's entry, 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 entry. I'm not really interested in taking great profits. And then the moment you can count a weekly 1, 2, 3 and you look for a 5, that's where trading changes from an Elliott wave point of view. Everyone will have their own style. But do I then identify this as a top? No, but we might. We might, right? And it's the potential of a top that should change the trading. So I am very happy to sell after a low time frame 1, 2, 3, 4, 5 wave structure, wait for a range, and if the range is corrective, I enter and I go up. Then I take profit after low time frame 5 wave structure. I take some profit again. I wait for a range again. If the range is corrective, I re-enter. Stop loss, look for price to move up. Count low time frame 1, 2, 3, 4, 5 wave structure. Sell. Wait, So you get what you probably know what I mean by now. Which also means that you're not trying to snipe the exact top, right? You won't catch 100% of the move, entering exactly at the low to all the way wherever the high is going to be, exactly the high and pitch perfect, right? I mean, maybe someone will, but generally that's not the case. And if you try, then most of the time you are going to be like selling in the bear market because you wrongly identified the top. You thought this was another little retracement, and here you thought, all-time highs again, and then poof. And then as price moves down here, you're like, oh shit, my profits have halved. It doesn't make sense anymore. Why should I sell? You get that stuff. So it's about risk management. Now, from an Elliott wave point of view, can we identify tops? Yes, absolutely. Right? That's why we have the probabilities on the lower time frames. That is why we track multiple time frames. And that is why we keep an eye on the weekly. That's why we keep an eye on the daily. Right? That's why we keep an eye on the 1 hour. Right? And the lower time frames will tell the stories of the higher time frames. But you should see it all in sync. If you do not trade, or if you do not count the weekly and you only trade the 1 hour, it's very difficult to get a great swing going because you don't really know, like, where are we in the bigger scheme of things, right? Are we is that impulse up? Is that a wave 3? Is that a wave 1? Is that a wave 5? Right? Should I take profit or not? So of course on the 1 hour you can trade all of this, right? But yeah, on the weekly determines the higher time frame trades, and if you can find a low time frame entry, because that's of course a goal. For example, we were looking for price to move to the downside, take out the lows, hit the support box. For the ones that were here, they will remember we had a support box here, which was the point of control of this range in confluence with the 3A2. Now, on a daily time frame, this was important support, right? This is a daily time frame area of interest. And then on the lower time frames, right, we can wait for price to reach this level and then look for signs of strength. We don't necessarily need to catch that low. Right? So over here, I didn't, by the way. I didn't catch the low. We hit support and then price moves up. I wasn't part of all of this. I joined here. That is where I joined. Why? Because this was clearly 3-wave corrective, and low time frame, I was able to count 1-2s, 1, 2, 1, 2, 1, 2, supported by bullish CVDs. That is why I entered. Now, I'm not taking the low or sniping the low, but I'm part of the move, right? I need confirmation. I'm patient. I wait for price to tell me what to do. Right? And then I enter. So, and this might then be a low time frame entry, but I know on the daily that this low could be the low of a wave 4. So risk management wise, entering over here on the lower time frames has the potential of being a swing and at least take out the high of your wave 3, because a wave 5 is very, very rarely ever truncated, right? So you would expect the high of 3 to be taken, especially after a WXY double zigzag. A WXY cannot be part of anything that doesn't take the high. Yeah, a flat where wave B then doesn't take the high. That's possible, but that's also rare. Right? A, B, C, and then wave B goes to the 0.9 taken from the start to the end of A. But that's very uncommon. Wave Bs and flats most commonly take the high of your 3. So after a WXY cannot be part of a bigger W. Right? It can be part of an A, but A means flat, right? Not zigzag. Minimum target 0.9 to not take the high of 3, but most commonly, by far most commonly, it takes the high of 3. Right? So it has the potential for a swing. So I know that even though it's a low time frame entry, it has the potential to be a daily trade. And this is how you can combine different time frames in your trading if you know what you're looking for. Right? So it might help you with your trade management. It does require you to count multiple time frames and know what areas of support and resistance you have per time frame. And not every trade will, I sometimes I get a message, of course, because, people write me and email me and stuff, of people saying like, they have difficulty trading because they really try to get that one big trade that is going, that's gonna give it all, right? Basically, they're waiting for I enter here and we never come back type of style, right? First of all, you'll never know It's just risk management. But if you can find a high time frame area of support and then enter after, that is the moment where you have the potential to look for such a trade. Right? It's not like every move is going to be your big move. You just got to manage it well. Right? Take your profits accordingly, right? And leave a little bit to swing, potentially. And if price comes back down, just know where to get out and how to manage it. Have a plan. No? Have a plan and trade the plan. Very important. So that was a long answer to a very interesting question. Hopefully valuable. So price here, we can see what's interesting, right? This is just impulse, right? We spoke about this earlier. Highest probability, this is a 3. Price moving down, volume going down, right? You start to create ranges, 1, 2, 1, 2, 3, 4, 5, 4, 5. Right? Start to create maybe a bit of a rounded bottom. And what would be nice locally is for price to at least retrace to the 0.382 at 100.3. And then we'll see. Of course, if you move up, this has to be a 3-wave corrective structure for price to continue down. And the bulls want to see this 618 touched. Oh. So you got to get used to the MacBook buttons, yo. I like using command instead of control. Yeah. It's still too big. It's fine. Okay. There we go. A little bit of bullish CVDs locally. Not too relevant. I would like the 618 to be touched, and then, of course, bullish CVDs become more interesting. Let's put the 382 on the chart as well. There we go. Okay. Did we touch the point of control by any chance? Yes, we did. Point of control of the previous range. It's interesting, we have a bullish CVD here, which means that on the AGGR chart, this low didn't take the low on the left. But yeah, having a bit of a rounded bottom, 382 minimum retracement target would be solid. Grind, move, grind, retracement, right? Did he already show the polylines? Just spoke about these scenarios. Polylines are actually not too interesting because it's the 618 that matters. So you're either looking for an impulse down or the 618 gets touched and the probabilities are higher for an ABC. So you take the low first or you take out 618, basically. Let me show you. It's very easy for me to show. So also I have to wrap things up. How long have we been online for now? Ooh, 1 hour 15. That's a good time. Good time to slowly wrap things up. Have some dinner. Yeah, this 618 is your most important level, at least for the bulls. But on the 1 hour time frame, bullish scenario, right? You don't really have to look at the green count because most importantly is up, sideways, up. And for that to happen, this needs to be a three-wave corrective structure. And for probabilities to increase, it is a three-wave corrective structure. You want to at least touch the 618. The 618 is important as it invalidates a wave of 4 for potential impulsive continuation to the downside. Now you can still count 1, 2, 3, have a 4 and a 5, 5 in the blue C. And then after this blue C, you want to move up and touch the 618 that you then pull from this high to wherever that low is going to be. Right? So in other words, the bulls at the moment want to count or want to see the 618 taken, not take the low. The bears want to see another low, not hit the 618. The triangle here is irrelevant now because we got this move down. So you can count this WXY or you can count this triangle, but it doesn't matter for the count because what's most important now is this structure. So this here. What's up, maybe a Band-Aid? How you doing, dude? Coming in again. Mark Z, welcome, man. You've been gifted by Mr. Mold, maybe a Band-Aid. Thanks, dude. And I'll bump you up to silver. Just make sure to fill in the form. And that one. Thanks, maybe a Band-Aid. And I'll get you sorted. Cheers, maybe. Hopefully, maybe a Band-Aid, your trading is continuing to do very well. Right. So yeah, bearish scenario, take the low is a requirement before touching the 618. If you take the low, you want another 4-5. This wave 4 should not touch the 618 taken from the high of 2 to the low of 3. That's going to be your invalidation. The bulls want those 618s touched, basically. So yeah, with regards to the polylines, you know, it's just a 618 that's most important now. I don't have polylines on my chart, but if I would draw them on my chart, then you could do this. You can do this, and you can do this. Basically, this is a summary of what I just explained, but of course, you know, it's simplified. So we just patiently wait what price shows us. No? 618 is important. Nutrition trader, 120, yeah. Important level. Yeah, there's some things going on at 120, so yeah, very interesting indeed. But everyone, it is time for me to continue the night here in France. Tomorrow, you can expect a update in the morning. So, of course, we will be live in the afternoon. But there will be an update tomorrow. Let me quickly check here. What's my plan? Is it? Yeah, hopefully before my appointment that I have. I have an appointment in the morning. Hopefully I can get the update out before. So I'll try, at least. I'll try. But there will be a video. That's what I mean to say. Besides the live stream in the afternoon, there will be a video coming as well. So you can expect it. So everyone, thanks for hanging out. Thanks for being here. Hopefully you found it valuable. If you just jumped in, unfortunately it's the end of the live stream, but the analysis starts at 16 minutes. I just did a summary as well. So if you go back like 3 minutes or 4 or 5 minutes into the stream, you'll see me summarize the probabilities and the scenarios as well. If you wish to have a very short version. So the book will be very useful if you are, yes, it will also be useful if you are start from zero. Right? Because it basically contains all the theory that you need to know about Elliott waves. So if you study that whole book, you'll be good, right? That's a great way to start. Always starts with the theory. But Bitcoin Balls, sorry, time to go. Cheese, what's up, man? Good to have you here. Thanks everyone for being here. Tomorrow, another day. Tomorrow we also have some news, I believe, during the day. So let's wait and see what we get. But trade safe. keep an eye on the 618s, right? Very important from an Elliott wave probability point of view. And yeah, a bit of patience is required, I suppose, for the bulls at least. So yeah, thanks for being here. Thanks everyone for spending your time. And I will catch you at the next one.